This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil, and welcome back to Invest Like a Pro. Today, I want to show a 4-time frame trade. All 4 time frames are playing a role in this trade. Now, the reason I want to make sure everyone understands what I'm doing on this channel, as well as what I do with my subscribers. And I know a lot of my subscribers like to watch this channel, so it is directed towards them. I think everyone can benefit. It's not like you have to be taking my research to be able to benefit, but I do want to make mention that I think the people that are the subscribers, I want to make sure they get this information, because if we look at what's taking place in the market right now, there's a pretty high probability that we're going to bounce around a little bit. I mean, it's not to say that we can't break down or that we can't break out. I mean, either one of those are a possibility. I just think it's more of a higher probability that even if the market, if the S&P decides to take off, right, because we've got 7 stocks that are still in a trend and people are still buying those, yeah, okay, then maybe that index could make a move. But with what's going on with the Russell, what's happening just overall, when you look at the advanced decline line and the participation overall, I think you have to be ready for more trading opportunities. And when I say trading, what I'm saying is that you've got one time frame going in one direction and another time frame going in an additional direction. So you could have a monthly chart that's in an uptrend but extended, right? You have a weekly chart that might be sideways and overbought, and then you have a downtrend on the daily chart. Well, you could play that downtrend on the daily chart as long as there's room to the monthly support. I'm going to show you an example exactly of what I'm describing here. Now, I'm only showing you a short trade, but that doesn't mean you can't do these trades on the long side as well. You need to be ready. I think this is a tactic. It's something that I talk about in my course. You could take the information from my book and extrapolate that, but I think obviously I go into a lot of detail in the course. It gives you a much better idea of how to play these, but I want to give you an example of one today. So let me just make mention again that if you're interested in getting started with this type of information, if you like what you hear, I would suggest going to rabilstockresearch.com/book. I'm offering the book at a discount in an ebook format. So if you're interested in taking a look at that, go ahead and check that out. All right, let's go ahead and get into this example. Okay, I'm using LSCC as our example today, and I want to start with the monthly chart because you can see how and I talk about this a lot, when there's air between the price and the 18, we want to be looking for some kind of a pullback. So I really like this trade. I think this is a good trade for you to learn and incorporate into your process. And the reason is that if you're playing, let's say you're playing monthly, weekly trades. So you got monthly, weekly patterns, and when you do that, you're giving them some room. The stop is pretty far away. What you can do in this case is have other stocks that you're watching that maybe don't have as good a qualities to them, but have some air underneath that you can play on the pullback. And while you're going to have stocks that are pulling back on you that are monthly, weeklies that aren't necessarily breaking down, and you're not getting stopped out, but you can cover them by maybe doing a few of these counter trend type trades. So when I was running a hedge fund, or co-managing a hedge fund, I should say, we did a lot of this type of counter trend type look, because you don't want to necessarily just exit out of all of your longs and then try and get back in. That makes for a lot of work, and you end up missing the re-entry pattern. So what I like to do is look for stocks like this so you might be long LRCX and it's getting ready to pull back, and so you look at this LSCC and you say, you know what, I mean, we've got a new high here. MACD actually is not confirming that new high, even though it's a little far apart. It is showing that the momentum is slowing a little bit. And then if you look at the weekly, we've got the same situation. We make a move to the upside with pretty strong momentum condition there, and then we pull back. We go to another marginal new high here in middle of July, and MACD can't even get above the signal line, nowhere near the highs, and ADX is down pretty low, pretty considerable slowdown in momentum. All right, now
if we go and look at what was going on in the middle of July on the daily chart, we had this gap down. That's basically where this started to drop down here, right? That's where this was happening. If you notice, that it was right around earnings. So I'm not going to do this trade right around earnings. So I'd keep an eye on this. And if you notice what happened, it kind of bounced around a little bit longer. So we had a bearish pinch play here that actually triggered, right here, right on this bar there. And that was this bearish pinch play. We have a lot of room to the zero line. But if you notice, there was another one that took place right here later, and we still had a decent amount of room to the zero line, and we still had a decent amount of room to the 18-month line. Okay, so I'm just trying to take advantage of this open air and pullback. I'm not trying to call a top. It's really hard to call a top on a stock like this and look for it, because the thing is, even if it ultimately is going down, you're going to get bounced around to get there. It's not typically just going to crash. So try and play these little open windows when you have them, and try and take advantage of some of the smaller time. This is the epitome of trading in multiple time frames. So we got open air, we've got room to support. Secondly, we've got some slowing of momentum, and we do have a couple pinch plays. The first one we can't really take because, well, I'm not going to take because I'm not going to do it right in front of earnings. But here we had some room. Now, if you notice what happened, we did have this tiny little pinch play to go along with this pinch play, right? But I mean, it's so, like you got to take out your binoculars to be able to see it. I want to see the simple ones. You see how simple this looks? You see this rally to a declining 18 with a declining 40? And it was another pinch play right here after breaking support, right? So this trade, to me, it's all about whether you can make it happen off of this time frame and get the risk reward good enough with room to here. Now, with the price around 85, 86, and you're entering, notice what happened on this time frame. We went into the zone and we came out, right? Into the zone, and then we came out. Into the zone between the 18 and the 40, and then we came out. The moment that happens, we're looking for signs of a turn down. And in this case, you could have looked at this red bar or this red bar, taking out the 40. This would have been, I don't think you had to wait for that bar myself. I think based on the fact that you went in the zone and came out, this is right out of my course. Once that happens, you have a heightened awareness, and you had the reversal bar, and then you got going to the downside. So you're looking to get short here, right in here, and that's right around this 85 level, right? So we know our target is way down, pretty far away, down in the low 70s. So we can take that trade. Now, if I'm swing trading like this, I tend to like to try and get two times my risk as a target for this type of trade, and just kind of get in and get out. All right. I mean, you can look for 3 as well if you want. You can go for 3 to 1. In this case, you would have probably gotten it. I just think it's a really high probability to play 2 for 1, 2 times your risk. Try and get that and go ahead and get out. Now, there's other ways to do it where you could take a 1x, take like a third at 1 times your risk, take another third at 2 times your risk, and then put the stop on the last third at 1 times your risk, and then try and get 3 to 1. You see what I mean? So you could try and do that. Sometimes it's going to pay off and sometimes it won't, but you're going to only end up getting 2 times when you do it that way, right? You're going to have a higher win rate, but I don't know. Sometimes when you have all of this playing together, just play for the 2 to 1. It seems like it's a lot easier. Now, we can do the same thing on this rally. Do you see how we went in the zone and came out? And then we had this red bar. I think that's their trigger bar. Now, that's right around $80, 80 and a half. And we've got a lot of room to get down. Now, you could just play for this prior low if you want, but I think the target is, this is coming down to the 18-month line. I think that's a pretty high probability target. So what you might do in this situation is, when you put the trade on, when you get to 1.5 to 1, say you're going for 2 to 1. Once you get to 1.5, so you're 3/4 of the way there, just go to a break even. So that's almost like taking a profit when you think of it, because you're reducing the risk on the trade without taking any position off. And then once you get to 2 to 1, you can take it. Now, if you want to go for the gusto and go for the whole move, you can do that. But if it's a big move, let's say you're risking, $3 and or $2, and it's a move down to 10, like it's a 5R move to get to the 18, then I am definitely of the belief that you should take at least a partial profit at 2 times, something like that. Make sure you take something off, go to a break even, and then go for the bigger move on the balance. So these are a couple ideas. I want you to be on the lookout for this type of situation where we have open air to the pullback. We've got some slowing of momentum on this time frame, and then we get the real signals on this time frame with the triggers on this time frame. It's a 4 time frame setup. You got to be on the lookout for these. I think you can make some money doing this. Make sure you're keeping an eye on room to the zero line, right? We're now close to the zero line here. I would not take any new trades, even if I had. You see how it's at 76? I don't like this trade as much. We've got $5 of room. Maybe it's a little less than that. Maybe it's only a couple dollars left. So that's going to keep you out anyway. But I don't like it when the MACD gets this close to the zero line. Try and do the ones where you've got a little separation, and I think it'll play pretty well for you. All right. Let me know if you have any questions or comments. Thanks.